On Thursday, we had the plunge, so there was big money made there. If you missed the first euro sale at 113.50, 113.60, you had another opportunity to do it. So a total of over 400 pips, 500 pips there. If you took the trade twice, covered well over 100 pips on each entry. And so the big call was that we're going to get a bounce in the dollar. Here's your Dixie chart right here. So very possible that this bounce terminates here and we could still do some work. I pointed out this being 1, 2, 3 drives to a bottom. So, I'm not convinced we're just going to blow off to new highs. Really, the line in the sand is going to come in around the 98 to 98.5 level to turn us long-term bullish a dollar. But you have to trade both sides of the market. I also warned about getting short the yen in the hole. That has also recovered 400 pips, so now you understand why. Chasing markets, gold down sharply. Chasing markets really never pays. And if you miss a trade, you have to learn to let it go. And let go of FOMO. FOMO will blow you out. FOMO is fear of missing out. You never really have to be afraid of missing out, because in trading, there are always other opportunities, and capitulating to that fear, any kind of fear, but especially the fear of missing out, creates you launching positions after a move has been well underway. If you miss it and it continues, so be it. But the risk reward in chasing markets, I've learned over the 3 decades doing this, is rarely worth it. So we're going to miss trades all the time. I miss trades every day, but realize it only takes one. And there were several calls from last week that worked out. It's going to be hard to top the recommendations I made from last week, but I'm going to give it my best. Now we want to preserve the big gains made by being there for the stellar bounce, so we're getting into some support levels. You never go broke taking profit, and I'm a big believer in partial positions. Anytime you have 100 pips, especially 2, you got to go the door on at least half the position, trail your stop at the minimum to break even, and what would be preferable would be for you to have a profit stop. And then when you have windfalls, just go the door. And that's what you should have done. I was talking about a 125 euro yen. We got to 550. Anytime on a long-term forecast like that with big objectives, anything within 50, 100 pips on a call like that from 130 to 125, it's close enough for government work. Give me a Y if you're with me. Talking about risk management and also profit management. Everyone talks about risk management. No one talks about profit management. And profit management is very important. And you have to protect those profits. It's not the house's money. It's your money. Learn to protect it. Scale back your trading a little bit size-wise after a big run. Nothing wrong with doing that. Nothing wrong with being flat for a while and reassessing and letting markets recycle and set up again. Give me a Y if you're with me on my philosophies and you understand what I'm saying. So enough of the lecture. What's next for the dollar? This 97 level, 97.50 level was broken on the big breakdown, so we may see some resistance setting here above this 97 level, 97.50, and then we'll see what kind of pullback we get. Still also very possible we just make a push up towards this 98 level. 98.5 was a line in the sand on the way down, so most likely, at least for now, has to be the line in the sand to confirm an all clear in the dollar. Give me a Y if you're with me. So something else I got right that finally began to manifest was the crude oil market. Crude oil had a nice recovery, held previous lows, the crude. Canada really did not get going while crude was retesting the lows, and now that crude has advanced, it's really not selling off either dramatically either. So it looks like Canada in some way, not completely, is beginning to disconnect with oil and maybe just trading more like a strong dollar or weak dollar rather than it just being related to crude. Here's your look at the crude oil market. We did come out of the hole last week. On the spot markets, we held previous lows on the thirds. So here's your second drive in crude. Maybe we rally and get one more. A lot of two drive formations setting up. So it still was almost a $3 bounce and recovered everything it lost last week. Still not convincing though, although I think eventually we're going to make a move up towards 36, 38, which should pressure Canada. Canada's kind of turned into a non-trade. We caught the bottom for a nice pop. We haven't even retraced 50%, so maybe crude has to pull back some more. And even on a strong dollar day, Canada's not doing much. So I think it's real late to be bearish crude. I know a lot of people are talking 20, 17. Eventually, I think that we at least rally back to 38 to 40 and they'll reassess there. If that happens, or when it happens, then we should see another leg down to Canada. 134 minimum, maybe 130. Give me a Y if you're with me. So a quick look at the shooting star gold, which became parabolic. Now beginning to give it back, but great run from the lows, over a $200 run. I think this run is most likely completed. And we could get a big pullback, something I talked about that I'd be interested at about 1100, 1180. So already we're 60 bucks off the high of the move on that blow off of the dollar coming back. I think it's very possible that we try this 1120 to 1080 level in the coming weeks, which also implies a stronger dollar to come. Give me Y if you're with me. Although Aussie seems to be in a bit of a rectangle. Rectangle to me means a range. No breakout one side or another. This will be an interesting test. Aussie really couldn't get going during this tremendous bull move in gold. Let's see how it reacts if gold pulls back to some technical levels. I do believe we'll get a higher low. I'm not looking for new lows anymore, but it could be as deep as 1100. I think that's going to be a great buying opportunity. You guys know I liked the gold shares. Gold shares were not making new lows when gold was down here. There have been tremendous moves in gold shares over this course of time, and they too should represent a buying opportunity after a sharp pullback. Give me a Y if you're with me on my view on gold. So US dollar yen was under a lot of pressure because of the strength, risk off from treasuries. Treasuries, I think, may be in the process of putting in a top. We have had a pullback bounce in the end, pretty good pullback too. Like I said, I can't really get, I said I can't chase the short side of the yen with bonds doing this. They could be vulnerable. So there could be some more upside in the yen, although we are approaching some resistance in the yen. So my analysis helped you avoid some pain chasing the short side of the yen like a lot of people were recommending. We'll see what happens. We've had about a 400 pip rally. You guys know I never chase anything. Let's see what happens on a pullback in the yen. See how if the BOJ possibly was in there, and a lot's going to have to do with this. You know, this is really the linchpin of what's happening across the world is a fear in global equity markets. Last week I said I didn't think that the markets were going to crash. I talked about the potential of the dollar coming back with a recovery in the S&Ps. So obviously this 1800 level is going to be the line in the sand for bears. Wouldn't surprise me from here we get some type of pullback. I wouldn't even rule out some type of wash under 1800 temporarily. But to me, I just can't get aggressively bearish the S&Ps like a lot of people are, because it's very possible going into the spring, possibly the summer, that there's better shorting opportunities on a nice fib retrace of this whole decline, regardless of where the low comes in. Give me one if you're with me. It's very possible that we, just like the dollar pulls back but doesn't make any low, and maybe the S&Ps do the same thing. The US is closed today, so maybe we get a pullback to this 1835 level and then launch another rally. Back over 1920 is going to give you a target back towards 2000. To me, that implies not a crashing dollar, but a recovering dollar, although it's going to be quite a two-sided trade. I'm not sure it's going to be any kind of blow-off move where it happens in 5 days. It may take some time to unfold. Give me a Y if you're with me on all the outside markets, correlating USD CAD to what's happening in crude, the Aussie, although disconnected from gold on the advance. Want to see how it responds to the gold. If I'm right about a pullback towards 1100. The S&P is holding as forecasted last week for a bounce, which created the bounce in the dollar and some stability, represented some great shorting opportunities in the euro, as well as cable. So got the direction of the dollar right, cleaned up on the guppy and euro yen achieving targets, gave a re-entry in the guppy as well at 167, and we traded as 160. So tough to top a week like that. It's a shortened week. Yellen was testifying last week. Not sure there's any major economic reports this week. And with that, if you can give me a Y if you're with me on my analysis of the outside markets compared to the currencies. With that, we'll move on to the individual instruments. We always start off. So here we were. I said take a picture. Last week I showed the second drive. Had sales around 1350, and we got as high as 13.5. This was a nice trade. We did diverge. I said we could get one more push up, which is what we got to Thursday. Up toward, and 113.60 was my number, to possibly 114 on the outside up at this line. I never got to 13.90, but my numbers were 13.60, and here we are at 11.40. There's 220 for you right now. When I was talking about a correction in the euro, I went to the daily and talked about that we should be able to at least pull back to this previous high right here. So we have a couple different levels of support here for euro bulls. And of course, this first one was 109.80, but this was a grand prize stop right here. And I was talking about possibly 110.80, 111. Perhaps we work into this zone. This is going to be the first sign, if we start closing under 110.80, that this is just an ABC and we're on our way to wash out, retest new lows. So this is going to be an important level in the market for the euro to hold. This was a high right after Draghi. Back here I was talking about stop hunts, although I thought there'd be one more jiggle before these stop hunts occurred. Said the grand prize was here over 110.60, so Old support, old resistance should become new support. So perhaps we head down here another 80 pips before we get a bounce. I don't think there's anything wrong with taking partial profits here from these sales and then tightening up your stop. Make it a profit stop, maybe around 112.50 if you want to really tighten it up. We shouldn't get back above this 50-day on the 4-hour. That's 112.12. So take some profits. I really don't see anything here on a 1-hour view. These lows are not diverging, but we could bounce back to this confluence level of 112. Wouldn't take much. Perhaps we get a turnaround Tuesday. But from right now, we're going to be willing to trade both sides of the market, and we can't get aggressively bearish until we negate the breakout under 110.50. Give me a Y if you're with me on my Euro analysis, and congratulations if you took either of these drives. Also wanted to give you a tutorial on 3 drives and how interesting they are. Of course, you could see the 1, 2, 3 here on the 4-hour. I want you to check this out on the 3rd drive. Look at this. So something you could look for, which speaks to the harmonics of 3 drives, is this is the 3rd drive right in here, this area. And what did you have within the 3rd drive? Well, I see 1. I see 2. I see 3 drives in the 3rd drive. So hard to debate that 3 number of completion isn't important in using it as a tool in your trading. You know, other people like other numbers. To me, the 3 is pretty powerful, right? Even in the spiritual realm, it's the Trinity. In the cultural realm, it's the 3rd time's a charm. In baseball, it's 3 strikes, you're out. Coincidentally, the Earth is the 3rd planet from the Sun. In other words, pay attention to the number 3, and if you're patient and just wait for 3 drive setups, and that's all you do, because they don't all work, but I think you've seen multiple examples over the last few years of how much power there is in that formation. 3 drives to a bottom and 3 drives to a top. Give me a Y if you're with me, and congratulations if you went along with my recommendation, get short at 13.60 in the euro. Everyone with me on the euro? Key level 110.80, about 110.80, this daily support level. Most likely, if it's bullish, we really shouldn't get down there and give people a chance to, you guys know how skeptical I am, that when markets give you an opportunity to do something you should have done here, a week later, I'm usually skeptical about it, but that is going to be a key area. Give me a Y if you're with me. Euro pound, we actually had a 2 drive to top formation. And we got to the weekly targets. Okay, way down here. I was talking about this 200 week moving average at 79.45. Voila. Okay, so talked about the breakout at 440. And here we are. So what's it telling me? You know, so far we had 2. Could we have a 3rd? You know, anything can happen. That would come in right around 79.65, but momentum, at least short term, seems to have been broken. So perhaps what we do is we get this bounce in here and we don't make a 3rd drive, but only correct this recent decline. Perhaps 78.6 back, which is going to favor the euro now for the bounce. Euro was a weak sister on the decline. Now it may show more strength and we could finally get the cable, which held up better than the euro. So 61.8 back. coming in all the way up here at 78. So if this is going to be the case and we get this bounce, maybe not a new high in euro pound, but we get a nice bounce in euro pound. Of course, cable hasn't made new lows like euro, but now they're starting to get to it. I talked about last week, I didn't think that we would get above the 46 level. Talked about getting short here last week. This short is just beginning to pay off. So the euro is already taking out these lows. Looks like we're setting up a descending triangle here in the pound with this flat line at 43.60. So this is about a 300 pip formation, which eventually could take us back down to 141. So for now, euro looks, pound looks like a great short at levels I talked about last week. I said I didn't think we'd get back through 46. We didn't. If you have any of the shorts up here, you have 120 pips. We now shouldn't even recover this high. Nothing wrong with booking a piece. I said this 360 is going to be an important area, probably analogous to the 110.60, 110.80 in the euro. So if we break down here under 43.60, it implies a retest of this whole bear market rally here against this 360, 370 level. So there's what it takes some partial profits right here at this line. A breakdown is going to measure pretty big. So I remain negative the pound. Probably more negative the pound than negative the euro. At least this week. Last week the euro was a star going into Draghi, help us out on our position. This week it could be the yen. I recommend maintaining shorts in the yen. Worst case scenario, you should have a break-even stop above 45.33. Looking for a breakdown under 360 that could take us back towards these lows. Perhaps we get something like this. Yeah, like this. Down in here, some type of speed line at 2.5. We get the breakout flush at 2.5 before we rally back. So that could also be a profit zone on shorts recommended from last week. Give me a Y if you're with me in the cable. So this is why I warned about getting short in the hole in the yen. I kept pointing towards, we were having some daily divergences. We're getting some type of spike bottom here. I said it was a natural for it to rally back to the breakdown towards 116. Not to chase it down here. So we have some key areas identified in the euro around 110.60 and in cable at 143.5 and now in the yen at 116. I wouldn't chase the long side here. I warned against the short side here. If I'm right and the S&P's pull back one more time, perhaps we do get this pullback in the end. I'm not sure that we're going to crater to new lows, although the RSI did confirm here. I just have a hard time joining the bear club and S&Ps, but perhaps we get a pullback. We've had a nice rally. We're approaching the 200 at 15. You want to attempt shorts, you start it here, and at the minimum start looking for some type of fib retracement of this recent rally. I believe it's going to take it to the 112 range. So keep in mind, U.S. markets are closed. Will reopen tomorrow. But the home run ball, of course, was on the crosses. And I'm going to get to them as soon as I get this fib in here. Let's just imagine then maybe we get up to the 115 range. So perhaps pullbacks, if I'm right about the S&Ps not launching and breaking out right away over 1920, but pull back again. 113, maybe 112.50, 61.8% is a possible retrace for this week. If we get this pullback in the S&Ps after the launch recovery correctly forecasted last week. So this was a home run ball last week. I get short euro yen on the bounce towards 130. This was a bounce. We got up to 30.25. I had this line drawn for weeks. 25 is my target. We got down to 25.76, confirmed the low. But this was a home run ball. On Wednesday, I said you could take partial profits here, use a profit stop. So this was about 400 or 500 pips. I'm flat right now. Want to see what happens on a pullback. Same with the Guppy, which was another home run ball. Gave you a great re-entry at 67. It was right here. Talking about 160, said cover half here and the rest on this flush. So this was another good one, almost 700 pips. I did not reverse, I just booked it. For me right now, the yen and the crosses are a stand aside. I just want to see what happens here for a few days. I do want to get to the commodity currencies because when crude was pressing new lows, we really couldn't get anything going in Canada here. We're only able to rally 38%. I thought we might have a shot for halfway back. So crude's going to have to fall apart for Canada to retrace back up towards this 41 level. Maybe what's going to happen first is that we're going to head down and make new lows first down towards 134. I don't think we get much worse than 132, but this was pretty anemic bounce. Normally when crude was crashing like it was last week before the recovery, you would have had a 600 pip move in Canada. So now that crude has become a little bit more two-sided, unless it crashes, I wouldn't have expectations of more than 141, 142. And I'm open to the fact that if the dollar comes off, that we get one more low in Canada down here towards this 134 range. So that may be an area that I'd be paying attention to. Remember, it's not just the price, it's how it gets there. Everyone knows my belief. I've renamed the RSI from Relative Strength Index to Real Simple Implicator. And here on the 4-hour, it confirmed the low. Markets rarely bottom when momentum confirms price. Not sure if it did the same on the 1-hour. Let me tighten it up. Yeah, we had a little divergence down here, but under 30. So perhaps we're headed right back down to the 134 level, because I still think that before we get $20 crude, we have at least $37 to $40 crude. So has me not real constructive on USD CAD. I know a lot of people are. I was constructive enough because I was looking for a pullback in crude, new lows possible in crude, that we would get this. But I'm pretty unimpressed that all we could do is retrace 38% of this 1100 pip decline. But if crude falls apart, 140 is possible, 141 is possible. So I'm pretty neutral on Canada here. But my bias is to want to short Canada, because I think the whole world is bearish crude, and I think there's potential for geo risk, and the potential that crude is going to head up to 37, 38. Give me a Y if you're with me. Aussie's been in a rectangle quite some time, range bound, range bound. Perhaps we're setting up the right shoulder here and we're going to get another push down in Aussie. So, you know, the Aussie rallied with the gold, but it was a much weaker rally than the gold. And if the gold's going to come off, I would expect to see the 69 handle again in Aussie. What would change my mind would be closes above this would be pretty good for a breakout to the upside of 73, 72.90. But it looks like it's set up for a potential A, B, at least C back down towards 9.5. Well, that's about 200 pips from here. Any questions on anything I've covered? As I said at the beginning of this webinar, it's going to be tough to top what happened last week on the short guppy euro yen call re-entries that paid off very big. A couple of opportunities to short euro USD at 113.5 range. The short in the pound that we did not take out 46 as forecasted, and the warning about not being short US dollar yen when the whole world was looking for things to fall apart. Any questions on anything I've covered today? Congratulations if your work lined up with my suggestions and you were able to capitalize on this pop in the dollar, protect those profits. Thank you for your attention. Good hunting. See you on Wednesday. This is J.O. Pinkert,